On June 8, a number of state-owned banks issued announcements to cut deposit interest rates with immediate effect. Among lump sum deposit and withdrawal products of various terms, long-term deposits such as 3-year and 5-year deposits have been reduced the most, reaching 15 BP, and 2-year regular deposits have dropped by 10 BP. However, there are also banks that do the opposite. Jeremian News noticed that the 5-year interest rate level of the Beijing branch of the Bank of China has increased. The deposit rate cut is another round of large-scale adjustments after September last year. Industry insiders believe that this adjustment is intended to reduce the pressure on banks' long-term liabilities. Some institutional analysts believe that in the next 1 to 2 years, the deposit rate still has room for a further decline of 20 BP. All-time deposit rates fell below 3% according to the announcement issued by several state-owned banks, starting from June 8. The 2-year time deposit will be reduced by 10 BP, and the 3-year and 5-year time deposit will be reduced by 15 BP. However, specific to each bank, the situation is slightly different. The Industrial and Commercial Bank of China and the Agricultural Bank of China also lowered the current deposit interest rate on the basis of lowering the long-term fixed deposit interest rate from 0.25% to 0.2%. Before the adjustment, the 3-year deposit products of China Construction Bank and Bank of China were the few deposit products with an interest rate of 3% among state-owned banks. But after the second round of adjustment, the interest rates of all products fell below 3%. At present, only in order of interest rate, Bank of China's 5-year deposit interest rate reaches 2.9%, which is the highest interest rate among state-owned banks. It is worth noting that the Bank of China raised the 5-year deposit rate from 2.65% to 2.9%. Previously, the bank's 3-year interest rate and 5-year interest rate were inverted, with a 3-year deposit rate of 3% and a 5-year interest rate of 2.65%. A bank account manager told Jeremian News that the specific situation of each bank in each province is different, and there may be differences in the level of interest rates for each term. But the overall reduction rate is certain. On the whole, the short-term and medium-term deposit rates of 3 months, 6 months and 1 year have not been adjusted. Longer-term deposits such as 3-year and 5-year have the largest reductions, reaching 15 BP, and 2-year regular deposits are down 10 BP. In fact, not only time deposits, but also the interest rate on large certificates of deposits has dropped by around 15 BP. Taking ICBC as an example, on June 7, the bank's 1-month and 3-month large denomination certificates of deposit interest rates were both 1.6%. 6-month large denomination certificates of deposit interest rates were 1.8%. And 1-year large denomination certificates of deposit interest rates were 2%. 2.5% for 2 years and 3.1% for 3 years. On June 8, the 2-year and 3-year terms were also reduced to 2.35% and 2.9%. Previously, a reporter from Jeremian News found that China CITIC Bank had taken the lead in lowering the deposit rate. The staff of China CITIC Bank said that the 5-year deposit rate has dropped to 2.7%, and there may be no quota. At present, China CITIC Bank's 3-month, 6-month, 1-year, 2-year, 3-year, and 5-year deposit interest rates are 1.3%, 1.55%, 1.85%, 2.2%, 2.65%, and 2.7%, respectively. Dong Zimiao, chief researcher of China Merchants Union Finance, said in an interview with Jeremian News that large commercial banks are the main body of my country's banking industry, with liabilities accounting for nearly half of the industry. And they have a pivotal market influence. After large commercial banks lowered their listed deposit rates, it is expected that small and medium-sized banks will follow suit. According to Dong Zimiao's analysis, different banks' asset-liability structures and market competitiveness are quite different, and they have different pricing strategies for deposit interest rates. The subsequent reduction of deposit interest rates by other banks will not be completely consistent. From the perspective of the market interest rate pricing self-discipline mechanism, the floating range of deposit interest rates of small and medium-sized banks is higher than that of large banks. Generally speaking, the deposit interest rate of small and medium-sized banks will still be higher than that of large banks. Since the beginning of this year, the scale of my country's banking industry has grown rapidly, but the growth rate of profits has slowed down, and the profits of the banking industry in some provinces have experienced negative growth. For example, in the first quarter, the net profit of commercial banks only increased by 1.3% year-on-year, and the growth rate fell by 6.1 percentage points year-on-year. By lowering the deposit rate, it is still necessary to reduce the cost of debt to delay the pressure of narrowing the spread and maintain a steady development trend. Dong Zimiao analyzed. The CICC research report believes that after the interest rate cut, the average deposit interest rate in the next 1 to 2 years still has room for further rate cuts of about 20 BP. The main logic is based on the fact that since 2020, bank loan interest rates have fallen beyond the low point in 2017, while deposit interest rates will remain basically flat in 2020. Still about 40 BP higher than the 2017 level. After the deposit interest rate is lowered, will there be policy space for the decline of LPR? According to the analysis of the CICC research team, considering that the newly issued corporate loans and mortgage loan interest rates have dropped to the lowest level in history, we believe that the current financing cost is not the core contradiction of the economy, and it is more important to stabilize market expectations through fiscal, infrastructure and real estate policies. However, considering that the formation mechanism of LPR is MLF plus point addition, The point addition depends on capital cost, market supply and demand, risk premium, etc. So it cannot be ruled out that the reduction of bank debt costs will drive the unilateral reduction of LPR by 5 to 10 BP. Dong Zimiao predicts that deposit interest rates may continue to decline for some time to come. After the cost of the liability side falls, it may be passed on to the asset side, which will promote the steady decline of loan interest rates. However, considering that the current loan interest rate is already at a low level, the room for future decline is relatively limited. Dong Zimiao suggested that in the medium and long term, the decline in market risk-free interest rates is the general trend. Therefore, for residents, it is necessary to balance risks and benefits to comprehensively allocate assets. If you want to pursue high returns, you must bear high risks. If you want to pursue stable returns, you can properly allocate cash management financial products, monetary funds, and savings treasury bonds in addition to deposits. After the deposit interest rate is lowered, deposit income will decrease, which will help to promote the return of deposits to the real economy, wealth management market, and capital market to a certain extent. But this is not a fundamental strategy to boost investment and consumption.